Greetings, Jedi traders. David here of TradingTips.com to bring you the technical momentum outlook for week 15. It is April 9th, 2017, with only a couple of hours to go before the market opens here on Sunday Globex session. As always, we seek financial advisement when trading with your money, as these videos are for educational purposes only, to support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, let's jump into a really quick recap here from last week and then see where we are currently and where we might be headed next week in both directions. Truly a lackluster week after employment numbers, FOMC minutes, and the U.S. missile attack on Syria that one would think move the market by the end of the week. We could see the ES here from post-election Q1, Q2, just unable to break above the Murray math level, MML upper levels. Steady the course as we simply continue to play off the 10 and the 50 period moving averages on all three indices. We can see the ES just starting to gain some traction there on Wednesday midweek as price action unable to break there. And the YM also price action holding around that major support resistance, 10 period on the green, 50 in the red. I don't know to break upside, but it's an NQ, which seems to be holding up its game to the upside as three new all-time highs hit this week. Here we can see Wednesday's move upside. Here the opening price for the week. Those dashed lines representing 1, 2, that's right, 3. A high here, 54.8125 on the NQ futures. Not so lucky on the YM or ES to the upside, as all the major indices across the board still closing under the weekly open. So with Wednesday, the highlight of the week, as price action managed to swing to the MML highs and back down to the lows in one session only to finish out the week, simply hugging the weekly VWAP. Here I want to show you that Wednesday price action. Talk about a move all the way to the upside. ES nice move here on a 5-4 flex Renko. If this is your first time watching the video on the using the combination of the Heikin-Ashi bars or any of my videos, let me go ahead and pop up again. The core strategy intraday is looking for Heikin-Ashi bars. What are Heikin-Ashi bars? Simply a trending bar that you see here on the right, defined by a solid body of the candle, tail up, tail down. Sometimes we get these long indecision candles, so it either tells me it's in trend and upside, or it's trending downside, or it's in an indecision. And again, there are a variety of ways to stay in trend on the charts. We can go over that in another video, but basically here, it's a decision between trying to define what the regular candles are versus the Heikin-Ashi bars. And again, the simple core setup, I have a 5144 looking for price action to be in trend and then applying a trade management strategy that once in play will hopefully keep me in trend. All right, so that was that ES setup there on the move on Wednesday together with the other three indices. You had a nice Globex move upside. We had some key economic data last week on ADP employment, non-farm payrolls. Obviously, we had the sell-off on the Globex from the missile being shot into Syria from our cruisers out in the Mediterranean. But basically, here, a little bit of chop at the top, and then you had yourself a nice trending. This is why trade management's got to play it by the rules, because you just never know when price action is going to turn around. All right, so to wrap up last week's price action, we talk about the weekly VWAP. In no way looking like the previous week, which price action absolutely stayed above the weekly VWAP. Here we could see we're pretty much hugging that weekly VWAP, but here are the MML levels, something we watch intraday as a adjunct tool. It could be your primary trading tool, but it's a nice direction in combination with the HA bars that says once you've hit the upper levels, wait for the momentum to shift back to the downside, and you start to see price action runs from 1 to the other. Again, preferring the higher time frames. Intraday, we go to the lower time frames, but the key point here is that price action could just not pull away from that weekly VWAP. Surely a different picture from the previous week, which we held to the upside. And pretty much, can you just say consolidation? In the end, finding pockets of intraday trend are basically being ready in both directions. Guys, if the ammo, or that's our ammo for the day trader. So we got the Heikin-Ashi bars, we got the MML charts in our toolbox, and we could always find an opportunity to ride a trend even when the week ends up flat around key levels. All right, so let's jump into the charts again. Let me just recap here. Again, you can find that in my week 14 recap, those charts. Again, each and every day, trading session recap and the pre-market trend that we'll talk about here at the end. All right, so finishing off last week, bottom line, this is what we were looking for. Price action around the daily 1050 MA. We saw that this week. We really weren't able to pull away from that. Upside, yep, NQ seemed to push the market up, but just being unable to hold to the upside. All right, so where are we at right now? Well, guys, VIX levels continue to remain low. Pretty much swinging between 11 and 13. Even popping up to 14 this week. Just for a smidgen. The plethora of open gaps still remain below, as we saw in the chart here. Let's take a look at the daily gaps. There they are. On the NQYM, YM downside, 2248. Plenty of open gaps below. 1575, nearest one on the ES. And our nearest open gap all the way down at 5232.50 as the all-time highs lurk above. With those open gaps remaining below, as the market too will one day return to close out these levels. The first inkling of any type of catalyst to move in that direction clearly seen here in week 14 with the news piece of the U.S. response to the Syrian chemical attack on its citizens. Like I've said, for most of 2017, it won't take much to spook the traders to sell off at these levels. All right, some other key things we look at. Again, looking at the each day's time profile and VPOC, we can see balanced sessions here throughout the week. There was our Wednesday drop, again, a very poor high. Then eventually market action will come and repair. So we'll keep our heads up on that. All right, so let's jump into the long-term chart, see where we're at currently. And then take a look here at crude and gold as well. All right, weekly chart. Let's start with the weekly chart as we have been in an uptrend since June, continuing to move to the upside. Resistance up here, 56.25. Take a look at the daily, 4-hour, and the core setup. Again, when I say we're holding above the 51.44 on the bigger picture, this is what I'm talking about. Price action has been holding up for some time now here as we battle in between the two MML levels after resistance up here, but finding support off the major support, showing me that the technical momentum still to the upside. It doesn't mean next week that we can't simply come right back down. I can't tell you which way we're going. I can only tell you where the momentum currently sits at this point. Price action here, again, holding above the 50 and just barely above the 10 to finish out the week. And on the 4-hour chart, upside looking at 68.75 and downside, watch for the support here at 53.90.75. If we're to drop, again, we would lose all the way down here to 53.64 first. I'd want to see if I'm going to find support here at the 50. Anything lower than that, I start to look to 53.12.50. And at that point, if we continue downside at some point, we'll be looking at the 200 period moving average further downside after that. All right, so there's our NQ. Let's take a look at the YM. Take a look at the weekly YM. Again, after the hit on the reversal, after a bounce up in November, off the 17,500. All the way up, pull back here, still finding support here above the resistance. That's a good sign. So we take a look at the daily, the 4-hour, and the range chart. Here we could see the 4-hour chart still holding in the major support resistance. So flip a coin, we go either direction. 2070.81 upside to 820, all the way up to overbought here at 859. I use overbought in quotes as price action can simply run through that as well. That's the bigger picture as we continue to hold up above the 51.44, 534 back in sync to the upside off the bounce of the support. Good sign that price action is still holding up here in the uptrend. But again, I want to get above this 10. I want to get above the 50. So we watch for the 50 break this week at 695. We break that 695. We hold on the intraday. We'll be looking upside towards 938. Before we get up to 938, we'll be looking at 781 up to 859 here. Anything to the downside, we're looking back for support here from 469 down to 391, which will put us back in the same level here on the range chart as well. All right, take a look at the weekly ES. There we are. Same picture as before, as we're struggling here at the high of the resistance. Again, all-time high back up here in Q1. All right, let's look at the daily chart here, 4-hour and the core setup. Price action, again, I like to see it regain that footing above the 50-period moving average. As we hold above the major support resistance here on the ES, consolidation through the week on the weekly VWAP. So there we are, major support resistance. Upside, we're looking at back at revisiting 23.75 up to 23.90. As I said before, watch those daily gaps, as well as regaining to the upper levels, 24.01, if we're able to push back upside. All right, so again, upside looking up to 23.75 up to 24.06. That would put us back at the all-time highs. But again, I'll watch again here on the daily, look for a little bit of familiar territory as we started to struggle within this box of resistance up here, 23.75 up to 23.90. But again, key is we got to get above this 50-period moving average to regain those levels upside. So again, watch that 75 to 90 and downside 312 down to 2097. All right, also every day, 15 minutes prior. Also check out my blog there as I post the intraday look on the 15-minute chart, which gives us a smaller time frame, something you can use for the intraday setup, and where we are in coordination with the weekly VWAP, as this could change overnight based on the Globex session trading. And then finally, looking at the crude for the week as the crude continues to gain after the lows. What a move on crude after thinking, yeah, we're coming down. We left some open gaps down below, but crude getting a nice lift back into the low 52s here. Here we can see on the daily chart, we're back above the 50. That's what we'd like to see those indices gain. But again, watch for the resistance back up here, 54.69 as we had before. 4-hour charts here with two different MML settings. One a little bit longer term, one a little bit shorter term. Again, back up here, overbought, reversal, bounces back down, but we're holding. That's a good sign as we held here downside. All right, regain off the 250 upside, and weekly VWAP on a 16-minute chart. Look at that. Nice move over the course of the week as price action. This is how we had the indices on the prior week after shuffling there for a couple days. But weekly VWAP, nice move here on the crude this week as it found support not only at the MMLs but on the weekly VWAP and gave you that jump upside again to just simply pull back in one session but regain back up to 52.34. So watch for the resistance up to 54.69. Any pullback at this point will be looking to first 51.56 in weekly VWAP all the way down to 50.78. All right, looking at the daily 4-hour and the 60s here on the GC. Again, gold getting some traction back upside, pulling above the 250 as the indices pulled back somewhat this week. Gold gets a little lift here up to the upper MMLs. Again, waffling around the weekly VWAP as the indices did. So let's see if price action pulls back. We'll look for support on the 200 and the 50. Again, with the 50 underneath the 200, that's bigger trend downside. So first, look for the support here up to 1236.8. All right, if we lose that, we're going to be around somewhere in between major support resistance and support downside here. Again, start with the bigger time frame. Look where the smaller time frames down, lower levels are, and then you'd want to go to the 15-minute intraday. So watch 1250 here, 60 minutes, 1250 major support. That will be your first level, which would put us in line somewhere here around the 200-period moving average. Anything lower, we'll watch for the shift downside. Anything to the upside, first level you'll watch up to is 81 up to 96 here, or just simply the revisit back up to 69 and 71 first before we reach up to these upper levels. All right, that concludes. I believe we've covered all the charts here. We got daily gaps. Again, watch those intraday as we either open them up or not. Watch the TPOX, watch the VPOX intraday as well. And then make sure you check out my morning blog for the smaller time frames on the 15-minute, 60-minute, and the 4-hour charts. All right, Jedi traders. Right now, the technical charts remain consolidated in a month that has been historically a record of being bullish. Yet to be seen. While we know past performance is never indicative of future price action, the market seems to be waiting for this opportune moment for the next move. Big picture events ahead include tax reform and infrastructure spending out of Washington, when if it becomes a stalemate, may not look good for the sustained and relentless rally. Any pullback at this juncture will obviously be looking to the 200-period moving average for the next major support, or for the market to regain its footing above that 10 and 50-period moving average, which the NQ appears to be in command after all these 3 new all-time highs that it made last week. Key events of the market this week will include the JOLTS data on Tuesday. We got Yellen speaking on Monday. Hey, anytime she speaks, the market's watching. And end of the week red star events, which likely not move the market much, as the market will be closed on Friday. Core economic earnings for Q1 starting to roll out for the next several weeks. Surely an indicator if the numbers are that great, which can always be smoke and mirrors at any time. So don't forget Washington politics, worldly imbalance to set the market in motion, which by any other given year may not be as newsworthy, but continue to play this bigger role in 2017. As we have seen since Q4 of 2016. All right. A couple of shout-outs here for your market analysis. SeeItMarket.com. Great analysis throughout the week. I am a contributing writer here as well. But again, putting out some key articles throughout the week to help you with your bigger picture trading analysis. JasonKelly.com. Check out his YouTube channel and the 3% Signal. Great stuff from the Macro View newsletter in your inbox every Sunday morning on the Macro View of the market. Check out Ken Polcari every morning newsletter from Previous Day Action. And without saying, the Shadow Trader, always good stuff on the morning analysis of the market profile, including the weekly wrap as we do as well. All right, Jedi traders, that concludes the insight into the technical momentum for week 15 coming up. Feel free to stop by at tradingfibs.com, my website here, or any of my social media outlets to obtain more information. You can check out my feed here at twitter.com. Just follow me at tradingfibs for intraday charts and my insight every day, as well as here on StockTwits, another social media platform for me to share my setup ideas. My mantra: one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball to the experts. I only watch what's in front of me and on my charts, and as always, leave your bias at the door when trading. All right, so bottom line, closely watch that price action around the daily 50 MA on the ESNYM. Let's show you that chart again. There it is. Watch that price action. Watch those MML levels. If unable to hold, price action may seek support on the next MML level downside on the bigger picture. Keep in mind those open gaps below. Upside, look to regain the all-time highs as the NQ leads the charge. Lifting and maintaining price above that 10-period moving average will obviously be a positive indicator of market momentum back upside. We still remain in an uptrend on the bigger pick. Signs of market weakness started to show in weeks 11 and 12. We pushed back upside in week 13, but only to consolidate here in week 14. Observe that intraday on the 60, 50-minute chart for any alert of the change in trend or continued movement upside. And keep that weekly VWAP on your charts to monitor trend change, as in week 14 price action struggled to pull away. If for anybody is interested in joining us, our community of like-minded traders seeking those highest probability setups, feel free to email me, David at Trading Fibs. You may join us any Thursday or Friday to view the live charts setups as they happen in the trading day. Hey guys, if I forgot anything, I'm sure to include it in my daily trend video, or I'll just tweet it out. Otherwise, have yourselves a Blue Zone day and remaining of the weekend. Wherever you may be, have yourselves a good day, a good night, and good trading to you.